Cathie Wood just made her first DoorDash purchase ever, $43.6 million worth of DoorDash stock after the company has already run up 95% this year. Most people would look at that and think she's lost her mind buying at these levels, but when you dig into what DoorDash is actually doing right now, you start to understand why Wood might be seeing something the market hasn't fully priced in yet. Wood bought 139,236 shares of DoorDash across 3 of her ETFs, RKF, RKW, and RKQ. This is ARK Investments' first position in DoorDash ever. She's had plenty of chances to buy this stock over the years when it was trading at $50, $70, even $100. But she waited until now when it's trading around $220 after running up almost 100%. The timing seems completely backwards until you look at what DoorDash announced recently. They're buying Deliveroo in the UK for $3.8 billion. That's not just another acquisition. That's DoorDash saying they're done being just a U.S. food delivery company. They want to own international markets, too. Wood has always been about identifying companies that can scale globally, and DoorDash just made a massive statement about their global ambitions. But the Deliveroo deal is actually the smaller story here. DoorDash also acquired an ad tech platform called StockSausage for $175 million. They're launching new AI-powered advertising tools. Food delivery was always a low-margin business where you compete on price and speed, but advertising is a completely different game. High margins, recurring revenue, and network effects that get stronger over time. Wood probably sees what most investors are missing about DoorDash's advertising potential. When you open DoorDash, you're not just browsing, you're hungry and ready to spend money immediately. That's incredibly valuable intent data. Amazon built a $100 billion advertising business because they could target people who were ready to buy. DoorDash has the same opportunity in food. Think about the data DoorDash collects every time you order. They know what you ordered, when you ordered it, how much you spent, whether you're a repeat customer, what time of day you typically order, which cuisines you prefer, and how price sensitive you are. They can build detailed customer profiles that restaurants would pay premium prices to access. The AI tools they're building through the StockSausage acquisition could automate this entire process. Restaurants could set campaign parameters, target customers who order pizza on Friday nights, or people who haven't ordered in 2 weeks, or customers who typically spend over $30 per order. The AI would optimize ad placement, timing, and messaging to maximize conversion rates. Traditional restaurant marketing is pretty primitive. Most places rely on generic social media ads or local promotions that reach random people who might not even be hungry. DoorDash could offer hyper-targeted advertising that reaches people at the exact moment they're deciding what to eat. That's worth paying a premium for. Wood's investment philosophy has always been about buying companies at inflection points, even if the stock has already moved. She bought Tesla after it had already gained significant ground because she saw the electric vehicle transition was just beginning. She bought Zoom during the pandemic run-up because she understood remote work was permanent, not temporary. With DoorDash, she's probably betting on a similar inflection point. The company is transitioning from a pure delivery platform to what could become the dominant advertising channel for restaurants. The timing of her purchase suggests she thinks this transformation is about to accelerate, not slow down. The Deliveroo acquisition gives DoorDash immediate scale in international markets where food delivery is still growing rapidly. Europe has different competitive dynamics than the US, and owning Deliveroo gives DoorDash an established player rather than trying to build from scratch. Wood has always preferred companies that can expand internationally quickly, rather than those that get stuck in domestic markets. The advertising business also has better unit economics than delivery. Delivery requires drivers, fuel, insurance, and constant customer acquisition costs. Advertising is mostly software with much higher margins. If DoorDash can shift even 10% of their revenue mix toward advertising, their profitability profile changes dramatically. Wood also added over $18 million worth of NVIDIA shares to her existing position. NVIDIA has only been up 8% this year, which is disappointing compared to its massive runs in 2023 and 2024. But Wood is still buying, which suggests she thinks the AI infrastructure build-out has much more room to run. Barclays just raised their NVIDIA price target to $200, which would be 38% upside from current levels around $143. The Blackwell chip generation is supposed to be the next major catalyst. These chips are designed specifically for AI training and inference, with significantly better performance than current generation hardware. Wood's continued NVIDIA buying probably reflects her belief that we're still in the early stages of AI adoption. Most companies are still figuring out how to integrate AI into their operations. As more businesses deploy AI applications, demand for NVIDIA's chips should continue growing. The infrastructure layer needs to be built before the application layer can fully develop. The difference between her NVIDIA and DoorDash purchases is timing in the adoption cycle. NVIDIA represents the infrastructure that enables AI applications. DoorDash represents a company that's now ready to deploy AI applications to transform their business model. Wood wants exposure to both the picks and shovels and the companies using those tools. Wood's investment approach has always been about identifying secular trends early and buying companies positioned to benefit from those trends. Her portfolio construction usually involves three types of positions: pure-play technology enablers, companies applying technology to transform industries, and companies with network effects that get stronger over time. DoorDash fits the second category perfectly. They're not building the AI technology themselves, but they're using AI to transform how restaurants acquire and retain customers. The food delivery space was commoditized based on speed and price. But if DoorDash can differentiate based on advertising effectiveness, they create sustainable competitive advantages. The network effects angle is important too. As more restaurants advertise on DoorDash, the platform becomes more valuable to customers because they see more relevant options. As more customers use the platform, it becomes more valuable to restaurants because they can reach larger audiences. These network effects create barriers to entry that competitors can't easily overcome. Wood has always been willing to pay up for companies with strong competitive moats, even when the stock price seems expensive. She bought Amazon Web Services exposure when cloud computing looked overvalued because she understood the long-term switching costs and network effects. DoorDash's advertising platform could develop similar characteristics. The Deliveroo acquisition deserves more attention than it's getting. International expansion has been DoorDash's biggest weakness compared to competitors like Uber Eats. Uber had a global ride-sharing network that they could leverage for food delivery. DoorDash was stuck building market by market. In the US, buying Deliveroo gives DoorDash instant access to the UK, Europe, and other international markets where Deliveroo already has established operations. More importantly, they can test their advertising platform in markets with different competitive dynamics and consumer behaviors. What they learn internationally could be applied back to the US market. Wood has always preferred companies that can scale globally rather than those limited to domestic markets. Tesla succeeded partly because they could sell electric vehicles worldwide. Zoom worked because video conferencing is universal. DoorDash's advertising tools should work in any market where restaurants need customer acquisition, which is basically everywhere. DoorDash faces serious competition from Uber Eats, Grubhub, and regional players, but their advertising strategy could create differentiation that's difficult to replicate. Building effective advertising tools requires significant investment in AI, data science, and sales teams. Smaller competitors probably can't match that investment. Uber Eats has advertising capabilities, but they're focused on multiple business lines, including ride-sharing and freight. DoorDash can dedicate their entire organization to perfecting restaurant advertising. That focus advantage could translate into better products and faster innovation. Wood probably sees DoorDash potentially becoming the Google of restaurant discovery. Google dominates search advertising because they have the best targeting and measurement tools. DoorDash could dominate restaurant advertising for similar reasons. They have the best data about food ordering behavior and can measure advertising effectiveness more accurately than traditional marketing channels. The financial engineering behind the move. From a portfolio management perspective, Wood's DoorDash purchase makes sense as diversification away from pure technology plays. Her portfolios have been heavily concentrated in AI infrastructure, biotech, and electric vehicles. Adding exposure to consumer discretionary spending and advertising provides balance. But Wood's willingness to buy after significant price appreciation suggests she sees DoorDash and NVIDIA as still early in their respective transformation stories. The next 12 to 18 months should provide clarity on whether her timing was right.